About the Chinese economy now and U.S. stocks as well. This morning is Vasu Menon of OCBC Bank. Good morning to you, Mr. Vasu. So China cutting the benchmark deposit and loan interest rate by 25 basis points on Sunday, the second in 4 months. Is China on the brink of deflationary spiral?
Well, I think there are concerns about slower growth and deflation in China. The economy has slowed down very sharply. Last year, it came in at 7.4% growth, which is below the government's target of 7.5%, and the slowest growth in 25 years. And the inflation numbers as well in China have been coming down. And the latest reading on inflation in China is 0.8%, which is below the 1% handle and a 5-year low. So, there are concerns about, growth and deflation in China. And clearly, I think the central bank is acting to, prevent the situation from worsening.
Vasu, can interest rate cut alone be able to revive appetite for productive investment there?
Well, I think it may help a little bit, but if you look at the numbers, it indicates that, China has a bigger problem, which is somewhat misallocation of resources. I think if you look at the growth in China last year, it came in at 7.4%, a slowdown in growth, despite the fact that new loans in China hit a record high of 9.8 trillion yuan last year. So despite the pickup in terms of, loans growth in China for all of last year, the economy still slowed down. So somehow it gives you the impression that, the lending is not taking place in the most productive sectors. So while the cut in rates may bring down cost of funds for, state-owned companies, some companies in China, I think the key thing is for China to reform eventually to make sure, it addresses this misallocation of resources.
All right, Premier Li Keqiang will be addressing the NPC about the economy. What do you think will be his assessment of the economy?
Well, I think he's going to highlight the fact that, the economy is facing downward pressure, which we all know. And I think that is going to signal to the market and, set the stage for the Chinese government to possibly undertake more stimulus. So far, in the last few months, they've cut interest rates twice. They've reduced the reserve requirement ratio once. I think what Li is going to say at the NPC could set the stage for further stimulus down the road. I think he's also going to highlight the fact that, China's growth is slowing down. He may take the growth target down from 7.5% to 7%, but I think he's going to highlight that, it's the quality of growth that measures, that means a lot to the Chinese government to ensure there's social equality within China. The economy creates enough jobs for new entrants into the market.
What about the expectations of loose monetary policy and renminbi depreciation, Vasu? Do you think this will persist?
Well, I think it will. I think the Chinese currency could weaken a bit more from where it is right now. The Chinese currency is currently trading at about, 626, 627 against the US dollar. And I wouldn't be surprised that, the currency slips a bit more to perhaps 635 to the US dollar by the end of this year. I don't think it's going to go into a free fall. I think China may allow weakening of the currency to help the economy. But at the same time, it doesn't want to see a sharply lower currency because I think it's trying to internationalize its currency. And the Chinese government's DNA is really all about stability. So they won't want to see any kind of major disruption in the currency markets.
Vasu, let's turn to Wall Street now. Do you think equities are stretched?
Well, I think they're not. I think they're not cheap. They're not as cheap as they were before. But they're not as expensive either. Wall Street is probably trading at about 17, 18 times in terms of PE ratio. Not as cheap as perhaps 10, 12 times. But I think, with the economy improving in the medium term, of course, with a lot of liquidity, I think there's more room for equity markets in general to go up and Wall Street as well.
So will economic data then be the biggest driver of the markets?
I think so. I think the earnings season is clearly winding down. The earnings season was clearly in focus in the last few weeks, but that's winding down now. And, investors are now starting to train their eyes on the economic data coming out of China. Sorry, not of China, but of the United States. And going forward, I think the state of the economy will be a clear driver of, of Wall Street. Also because, I think how the economy performs will determine how the Federal Reserve acts. And that's a big driver of stock markets, not just in the US, but elsewhere in the world as well.
All right, Vasu, thanks for sharing your thoughts with us this morning. Vasu Menon there of OCBC Bank.